perennially short in the paper markets. I would have thought that they would bash the price in order to shake out some speculators, because open interest on COMEX has increased a little bit, and also to ensure they've got a favourable valuation at the year end. I mean, bear in mind that the dealers' bonuses are based really on that sort of information. It's important to understand that the purchasing or the value of gold and its purchasing power generally varies very, very little over considerable periods of time. And any variation in value in the short term is probably as a consequence of shifts in the valuation for the paper currencies in which it's measured.
Let's talk about the upcoming financial developments. The U.S. dollar has taken center stage alongside gold and silver, with significant implications stemming from the recent FOMC meeting. Firstly, the dollar index exhibited remarkable strength, surging by 0.27% to reach a multi-week high. This surge was triggered by a dip in stock markets, which drove up demand for the dollars. Moreover, the dollar found support in the minutes from the December FOMC meeting, where policymakers reached a consensus on the need to maintain a restrictive monetary policy stance for an extended period. On the precious metals front, gold and silver have been in focus. Gold's value remains closely linked to the dollar's performance. Historically, silver and gold tend to thrive when the dollar faces headwinds. Interestingly, the lease rates for silver have surged, echoing patterns seen before significant price surges. These rates, essentially premiums charged for borrowing silver, have reached levels not witnessed since the major market bottom in 2008. This has led to an inversion of the lease rate yield curve, signaling a physical shortage of silver among banks and institutions. In light of these developments, the recent FOMC meeting's minutes provided crucial insights. They did not indicate an immediate Fed rate cut, which provided support for the dollar. The minutes revealed policymakers' consensus that it would be appropriate for policy to remain at a restrictive stance for some time until inflation demonstrated a sustained decline. Additionally, participants believed the policy rate was likely at or near its peak for this tightening cycle. These dynamics underscore the complex interplay between the dollar, precious metals like gold and silver, and the decisions of the Federal Reserve. Now we'll show you more clips of Alasdair Macleod on the matter, but first make sure to subscribe to the channel so you do not miss out on our daily videos. Also check our pinned comment to get some massive crypto sign-up bonuses. Let's get into the video.
I was very surprised that the price of gold held up so well right into the year end. Silver was less so. That was interesting because that is a very tight market, and they did manage to move that one down, so much so that actually on the year silver was unchanged, which from the point of view of year-end valuations would have been extremely profitable for the dealers in the bullion banks. So perhaps that's where they made their money rather than in gold. Now, having said that, the outlook for gold, I mean, there's no doubt about it. If you look at the technical analysis, the chart looks absolutely wonderful. I mean, it really does. You've got, you're breaking out of a, 2.5 year sideways move, because I think it first hit the $2,000 level back in August 2020. We've finally broken through that convincingly. Underneath this, the moving averages are in bullish sequence. I mean, the whole thing, really, it's absolute technical, textbook bull market, which is great. And the other thing that's so surprising in this is that apart from perennial gold bugs who are always bullish, I mean, let's face it, when things go down, they complain like fury that it shouldn't have gone down. But apart from those very, very few vociferous people, nobody is really long of gold. I mean, it is extraordinary. The only people who are really long of gold, and I think we ought to note this, really are the central banks. They've been accumulating gold, and we need to ask ourselves why. And I suspect also that quite a number of countries around the world have been putting gold quietly into their sovereign wealth funds or into various accounts, which are just basically not visible to the rest of us. So the situation going into 2024 looks to be, I think, about as positive as you can really get. Now, I wrote about this in my article for Gold Money last week. That was the last week of 2023. And I was trying to make the point, and I think this is a theme going forward. I was trying to make the point that it's not gold going up, it's the dollar going down, or other paper currencies going down. And indeed, if you look at the gold price in sterling, we're not at the highs yet. But that's because sterling has been rallying as the dollar has gone down, if you like, on a trade-weighted basis. I think it's terribly important to understand that the purchasing or the value of gold and its purchasing power generally varies very, very little over considerable periods of time. And any variation in value in the short term is probably as a consequence of shifts in the valuation for the paper currencies in which it's measured. And not only that, but of course, we have a situation where after 52 years of propaganda from the US Treasury, very few people actually understand that gold is money and the rest is credit. And that, I think, is a very important message for everybody to understand going into 2024.
In today's show, Alasdair Macleod talks about the current situation in the United States in 2024 as the government is grappling with a daunting debt crisis. The big question on everyone's mind is whether they can slash their spending, but here's the kicker: it's an election year. Betting on such a move seems like a long shot even for seasoned experts. Meanwhile, the price of gold has been on a wild ride, breaking free from its sideways movement for over 2 years. This suggests a bull market for gold, and central banks around the world are paying attention, quietly accumulating this precious metal. What's interesting is that while gold holds its value rather steadily, the US dollar and other paper currencies are slowly losing their worth. So while it might seem like gold is rising, it's actually the dollar going down. Amidst all this, there are growing concerns about the stability of the banking system and the potential risks associated with keeping your money in banks. Hit the like button, smash the subscribe button, and make sure to take advantage of our massive sign-up bonuses if you're thinking about adding Bitcoin to your commodities portfolio. Enjoy the video.
So it's not a question so much of gold going up, but the dollar going down. And we can see that on the trade-weighted index, the dollar has started falling actually quite rapidly. I mean, I think in the last couple of months, it's gone down from 107 to around about 101.5. It's rallied just a little bit in the last few days. That has been accompanied, accompanied by a decline in the yield on the US Treasury bonds going out along the yield curve. The 10-year has declined from 5% to, at one point, down to below 3.8%. That's a very significant move downwards. And what triggered this, of course, was the last FOMC meeting and Jay Powell's prepared statement, which led everybody to think that there had been a pivot in policy. In other words, instead of fighting inflation, the way I would put it is that the Fed is now trying to fight the debt problem. The debt problem basically being exacerbated by higher interest rates. So with that in prospect, obviously from the foreigner's point of view, this is not really very good news in terms of their dollar holdings. I mean, okay, they've done quite well where they've had treasuries out along the yield curve. But basically, apart from portfolio effects, this is, this, if you like, reduces the desirability of the dollar. On top of that, the carry trade, whereby people borrow yen, sell those yen to buy dollars and invest in US Treasuries yielding 5.3%, which is roughly what it is on a 6-week to 6-month basis, that suddenly becomes less attractive. So we've seen some considerable unwinding of that carry trade position. So all in all, I think things are going against the dollar, and that is the most important point to understand. And if people can really grasp that, rather than thinking that gold is rising, then they're halfway to understand what the future is for the dollar, and therefore how that is reflected in the dollar price of gold.
What do you think of today's show? Is Alasdair Macleod correct in his call regarding the dollar? Will precious metals thrive in this fundamental scenario? Let us know your honest opinion in the comment section down below. Thanks for watching the video to the end. You're the backbone of our success. Check this video right here, and I see you on the next one.